I won't stop till I hear him say,
This is the right time to consider the eventual benefits and some of the risks of introducing a blockchain technology for securities and especially derivatives clearing and settlement. Okay, what is going on, CYPRX advanced YouTubers? Welcome back to the CYPRX YouTube page. As always, if you're interested in learning about cryptocurrencies, commodities, indices, foreign exchange, please go ahead and consider subscribing to the YouTube channel. Don't forget, guys and gals, that once we reach 10,000 YouTube subs, we're going to be picking 2 lucky YouTube subscribers to win 100 XRP along with the CYPRX hat and t-shirt. In today's video breakdown, I'm going to do a deep dive on XRP potentially taking over the derivatives market capitalization. Something very interesting that has been flooding the internet is the ideology behind XRP taking over the derivatives market capitalization. So I'm going to kind of give you guys my perspective on some research that I found. Again, this is all just speculation at the end of the day, but the devil's in the details, guys and gals. Okay, you can pick up on bits and pieces of information, and again, base your own ideologies off of this information that I'm going to share with you guys here today. I know that I have done such. I am a firm believer that this is eventually possible based off of some things that Ripple executives have said in the past, which I'm going to share with you guys via a video display. And then I'm also going to read some things, some interesting fundamentals and articles that I found on the internet for you guys to formulate your own agenda. I'm not going to sit here and say that XRP is going to go to $10,000 because one day it is going to take over the entire market capitalization of the derivatives market, which is over a quadrillion dollars. However, I do think that XRP is going to play a massive role in the future for eliminating counterparty risk. So I want you guys to sit back, relax, and enjoy a little video breakdown that I'm going to share with you guys via Chris Larsen and something that he said way back in 2014. Now, this video took me a little bit to dig up, but I want to share this with you guys, and it is about 2.5 minutes long. So really take your time and listen to this, replay it if you need to, take notes on what Chris Larsen says, because this is going to play a massive role in the future for XRP consuming the derivatives market. Okay, so again, just sit back, pay attention. This video is like 2.5 minutes long. Take notes if you need to, but pay attention in detail what Chris Larsen says. I will leave this link in the video description down below for anybody that is interested in watching the full interview. But this part of the interview where Chris Larsen talks about derivatives, he talks about counterparty risk, he talks about gold and things of that nature, and how XRP is a bridge asset to alleviate counterparty risk, plays a big role in the potential for XRP to consume the derivatives market, or at least to help eliminate that counterparty risk via what takes place in derivatives trading. So just pay attention.
These various systems together, just like the internet brought together, pre-internet communication systems. It used to be so expensive to make a phone call internationally. You have to line up in front of some office somewhere and pay a fortune. And now we take it for granted that information just travels freely everywhere. That's where value exchange is going over the next decade because of these breakout technologies like Bitcoin and like Ripple.
And I would assume that Ripple would allow you to have more liquidity in these currencies. So by using XRP, the currency behind Ripple, you could trade my airline miles, which aren't extremely liquid, for dollars in Kenya.
So the thing about what XRP, the role that it plays, this supporting role, Ripple doesn't require you to ever use XRP, even in a trade. I mean, the cool thing here is that anybody in the world now using Ripple can put a bid ask on anything of value from any issuer. So for example, somebody could decide, I'm going to make a market between United Airline miles, if once United Airline miles are on Ripple, I hope they will be someday, to Brazilian real. You could go directly. You don't actually have to go through XRP. But what we believe will happen is that most market makers, in filling out the world of exchanging value from anything of value, again, currencies, merchant reward points, airline miles, gold, silver, anything that you define as value, reward points, airline miles, anything that you define as value, most people will actually, most market makers will use XRP because most market makers will use XRP because as a currency without a counterparty, it is a completely unique thing in the protocol, just like Bitcoin is completely unique. So again, our view of why math-based currencies are so valuable isn't necessarily that they replace existing currencies, it's just that they have a very unique feature in that they have no counterparty. So the world only has to think about one thing when it comes to Bitcoin or Ripple, is the price in any microsecond in time. You never have to think about the counterparty risk. Turns out that is a completely unique thing that's never existed before. So why is that important? Let's say we use the example of a farmer in Nepal wanting to buy farming equipment from a supplier in Kenya, let's say. If you didn't have the math-based currency, even in an internet for value, you'd probably have to go Nepalese rupee to Indian rupee to British pounds to Kenyan shilling. That's a lot of hops.
Right, and you're going to lose a good amount of money on each hop.
You lose value on every hop, right? Because you're involving currencies with counterparties, things of value with counterparty. It'd be much better to go Nepalese rupee to XRP through a market maker, and then there's some other market maker that has made a market between Kenyan shilling and XRP. Now, Nepal and Kenya are one hop away. You're actually one hop away from airline miles, and everything is one hop away. That's why a math-based currency, we think, is really unique and really has value.
Excellent.
So you heard it right there. He said everything will be one hop away, and that is why math-based currencies will bring extreme value. So now to kind of go into the whole derivative thing, okay, I just found some interesting things on the internet from investopedia.com that I'd like to share with you about derivatives, and then we'll go into the aspect of Ripple in the derivatives market. So it says right here, it's important to remember that when companies hedge, they are not speculating on the price of a commodity. Instead, the hedge is merely a way for each party to manage risk. Each party has its profit or margin built into the price, and the hedge helps to protect those profits from being eliminated by market moves in the price of the commodity. OTC, over-the-counter trading derivatives, generally has a greater possibility of counterparty risk. So again, this is what I was going to say Brad Garlinghouse. This is what Chris Larsen was just talking about, alleviating that counterparty risk by utilizing XRP. But anyways, which is the danger that one of the parties involved in the transaction might default? This contract trade between two private parties and are unregulated to hedge this risk. The investor could purchase a currency derivative to lock in a specific exchange rate. So this is what it's talking about right here with the counterparty risk, and that to just correlate with what Chris Larsen was saying, XRP can do is completely alleviate that counterparty risk, right? So coming over here, so this is from investopedia.com, just a further in-depth analysis on counterparty risk. Counterparty risk is the likelihood or probability that one of those involved in a transaction might default on its contractual obligation. Counterparty risk can exist in credit, investment, and trading transactions. Counterparty risk is the likelihood or probability that one of those involved in transactions might default. The numerical value of a borrower's credit score reflects the level of counterparty risk to the lender or creditor, and investors must consider the companies that issue the bond or stock or insurance policy to assess whether the default or counterparty risk can take place. So, just as an example as to what Chris Larsen was pretty much saying, and it's that XRP or the utilization of XRP in the future will completely alleviate that counterparty risk. So an interesting article that I found on the internet, just doing some research on Ripple and XRP in the derivatives market, just some key highlights from this article that I'd like to share and read with you guys. We'll start all the way up at the top. The promise of blockchain technology for global securities and derivatives markets, the new financial ecosystem, and the holy grail of systematic risk containment. So this is pretty much a long read. I'm going to share this all with you guys. Again, smash that thumbs up button if you hold XRP and if you are a firm believer that one day the XRP could partake in derivatives trading. Okay, this is again something that might happen in the future. It is not going to happen overnight, and it is almost 110% going to take time. But in this article that I'm about to share and read with you all, we can see that piloting exists, meaning that they are testing this technology out. We can see that the transition via what the FSB, the Financial Stability Board, the IMF, the World Economic Forum are putting out via their PDFs and their documents, that they are indefinitely testing and utilizing Ripple and XRP for international payments. The next thing is, can they alleviate counterparty risk by utilizing distributed ledger technology? This article kind of clears that up for you guys. Okay, so stick around. Again, this is a long read, but it dives into detailed perspectives on what Chris Larsen was saying. So I'm going to start reading. Weaknesses in investor control over their investment in warehousing systematic risk in modern financial market infrastructure are the result of combinations of market failures and structural flaws deeply ingrained in modern financial markets. Yet the utility of complex FMI comprising long custodial chains and large global central counterparties for the operation of modern markets is not seriously disputed. The change in the technology paradigm with the introduction of distributed ledger technology systems for securities and derivatives, FMI, can increase investor control, the efficiency of risk management, and to some extent, augmentation and the distribution of systematic risks. It can then thus create a more diverse and resilient financial ecosystem. They're talking about the implementation of distributed ledger technologies in the derivative markets here, guys and gals, okay? The cross-disciplinary paper identifies a multitude of reasons that favor a paradigm shift in the FMI technology. It also sketches a comprehensive blockchain-based framework for the development of permission-based platforms for derivatives, clearing and settlement, and handling liquidity shortages with DLT systems. That is massive. That is a massive sentence right there. Okay. Arguably, the impact of technological change should lead to a reduction of industry rents for the benefit of end investors and the end of users of finance, entrepreneurs and businesses enhancing market welfare. Therefore, the use of blockchain technology in the FMI can transform the structure and future direction of the financial services industry as a whole. Okay, that is massive. So that was just pretty much the introduction. Scrolling down here to where we get into more distributed ledger technology and the mention of Ripple right here. In the case of OTC derivatives markets, risk concentration with central counterparties gives rise to systematic risk concerns, especially in the event of a CCP failure. Regulation has no clear answer for many of these challenges. Now, this whole sentence right here is very interesting surrounding the ongoing litigation with Ripple and the SEC is very, it's just a head scratcher. Okay, let me put it to you that way. It's interesting the time that they came up with it. It's interesting all the history that the SEC and Ripple have before the court case. And it's just very interesting surrounding what Ripple and XRP are attempting to do and why, in my personal opinion, the SEC is suing Ripple is to force regulation onto Ripple so that way it has the clarity, so that way it can do what it needs to do for the financial system. And I think that the elites know that. Again, that's just a personal bias. You guys can draft your own. Regulation has no clear answer for many of these challenges. In the case of the mandatory centralization of the OTC derivatives clearing and settlement regulation has given rise to unattended consequences. On the other hand, in recent years, the emergence of blockchain-based platforms with more sophisticated features, including permission-based systems for the transfer and trading of crypto assets, have raised the prospect of using the underlying technology to address some of the social costs associated with contemporary securities and derivatives trading, clearing, and settlement. The blockchain technology used by systems like Ethereum platforms or Ripple. So right here, you can see that they mention Ripple as a potential for the derivatives trading and clearing settlement. All right. In addition, two major international security exchanges have also declared that their intention to eventually move to a fully blockchain operating trading and clearing environment. This is the right time to consider the eventual benefits and some of the risks of introducing a blockchain technology for securities and especially derivatives clearing and settlement. Guys and gals, that is big. Go ahead and smash that thumbs up button. Again, if you've ever seen any of these other YouTubes cover the derivatives market and XRP potentially taking over the capitalization of the derivatives market simply by drawing on their Fibonacci and throwing you guys out some $1,000, $10,000 price prediction, this is a more in-depth analysis on how that is going to be the future potential of that. Again, this is not a bullish prediction video. I'm not going to sit here and say that XRP is going to be $1,000 to $10,000 because of this. But if that does take place, guys and gals, this is going to be massive for the future price of XRP. I highly suggest that you guys do your research. So it says right here, this would alleviate one of the thorniest problems of global finance, since big cross-border CCPs are often regarded as being, in practice, too big to fail in the highest order. Scrolling down here to the bottom of this, the overview of the issues, and this is the last little bit from this fundamental breakdown. Transferring the clearing of securities in certain types, either very standardized or highly complex, derivatives contracts to distributed ledger technology platforms could only act as a way to alleviate the burden on CCHs and their revenue and member rent extraction ability. It will also reduce some of the visible and invisible links of interconnectedness that have developed between the large financial institutions that act as clearing members. This would both facilitate CCH and CCP resolvability and augment the resilience of the financial ecosystem, especially in the context of derivatives markets. Realistically, DLT technology will be introduced in phases on the experimental and then pilot basis. Guys and gals, read that sentence again. Realistically, Distributed ledger technologies will be introduced in phases on the experimental and then pilot basis, starting with more standardized OTC derivatives trading and clearing, and eventually moving to the less standardized contracts. That is massive. That sentence alone right there says it all. Why? Because what is happening right now? What are banking institutions doing right now with Ripple and XRP? They are piloting this, and I've shown you guys this multiple times in previous videos. This is going to be big. Again, the 2030 agenda, this is not going to happen in 2022. This is most likely not going to happen in 2023, but 2025, 2027, heading into 2030, once these banking institutions get comfortable revamping their system and piloting this technology, that is when everything is going to hit this fan. That is when the switch is going to get flipped. Okay. As the FSB notes, and again, this is the Financial Stability Board notes, on some categories of clients have less strong incentives to use central clearing and may have lower degree of access to central clearing. Clearly, the introduction of multiple distributed ledger technology-based systems will resolve the issue of access without compromising transparency. So I'll end it to you guys right there on that fundamental breakdown. Go ahead and smash that thumbs up button if you've stuck around for that entire read. I know that it was a mouthful. So that takes me over to Ripple.com's website, just doing some interesting research, some key phrase research. Ripple partners with crypto facilities for XRP derivatives. Some key takeaways from this. Down at the bottom, we see in building networks effect on Ripple and the cost-cutting case for banks, we discussed the value proposition for XRP as highly effective bridge currency that enhances network effects and market depth across currency conversions on Ripple and in the developing internet of value. In order to support this use case, banks and market makers, again, that key word right here, market makers that provide liquidity may need to hold XRP in a significant size and thus need a way to manage volatility. Ripple's partnership with the crypto facilities plays a key role as we commercialize XRP for institutionalized use case. And it says right here, as with other assets or financial products around the world, participants desire the ability to manage their risk. Again, going back to what Chris Larsen said, where he talked about alleviating counterparty risk and the potential for XRP to do that. An XRP derivatives market enables both hedging and speculative positioning in XRP. It also contributes to the price discovery, here's that significant word, and market efficiency in XRP. Go ahead and smash that thumbs up button if you guys are vibing with this information. We come over here to the cryptofacilities.com website, and what do they say about Ripple? Ripple solutions lower the total cost of global settlements by enabling banks to transact directly without correspondent banks. In real time, certainty of settlement, Ripple's native currency, XRP, acts as a highly efficient bridge currency that enhances network effects and market depth across currency conversion rates on the Ripple network. Guys and gals, this is massive. This is massive. Okay, so just to put into perspective, again, no price prediction. Let's just say, for example, XRP was even to take over 2%, 3%, 4%, 5%, which is nothing in the derivatives market. That would put the price of XRP significantly higher than where it is currently at right now. You guys can go to visualcapitalist.com, check out how much the derivatives market is worth. It's honestly jaw-dropping. Again, this is a speculation video for the future potential of XRP based off of some of the fundamentals that I've read to you guys, based off of what Chris Larsen said in 2014. You guys can piece together your own bias. I'm not telling you guys to buy or sell XRP. Personally, I know that I'm situating myself on the right side of the market because I personally don't believe in coincidences. And this is all too coincidental for me to believe that this is just some conspiracy. Okay. You guys can draft up your own opinions. Smash that thumbs up button if videos like this help you guys out. Blessings to you guys all. As always, be cognizant. Please be aware. And I will see you guys in the next YouTube video breakdown.
I won't stop till I hear him say